Hello, everyone. Thanks for joining tonight. I'm Debbie Schwartz, founder of Road to College and the Paying for College 101 Facebook group. And tonight I'm going to be joined by two representatives from Student Choice, Trisha and Dustin, and I'll introduce them in a minute. And we're going to be talking about student loans and particularly student loans through credit unions. Let me just make sure. Oops. I have to do one thing. Okay. And let me give a little bit of housekeeping before we get started. And okay, so I'm sorry, I'm doing a lot of last minute settings because I pressed the wrong button, but I think I'm clean now. So this is technically a Zoom meeting, and I only
I'm talking and I'm listening.
sorry, you see? Okay. So this is a Zoom meeting, and as we just heard, you can unmute yourself and ask questions if you really want. But it would be more preferable if you can keep yourself muted so we don't hear background noises. And this tonight is recorded. We will send the link tomorrow. Sorry, let me just make sure I have the right settings. I do. Okay. And we have a chat where you can put questions. If the question relates to what we're talking about, we will kind of interrupt the conversation and ask, or if not, we will be going through questions at the end. So feel free to ask questions. That's the purpose of tonight. And to get started, I'd love if people can put in the chat where they're watching from. Most likely you have a high school senior who just graduated, so congratulations to all those students. And you're trying to figure out how to pay for college and what this whole loans, all the different loans are. And you know, that's what people kind of always feel like, well, we finished college admissions, and they take a deep sigh of relief, and then they realize, oh my God, there's this whole next phase of figuring out what different loans are available and how you navigate the loans and what all this other new terminology is to help your student and potentially you borrow money to pay the tuition bill. So that's what this whole night is about, to help you better understand all your different options, and particularly to better understand what credit unions can offer. So with that, I'm excited to introduce Trisha and Dustin. They both work at Student Choice, who's sponsoring tonight's event. And we're really happy to be working with Student Choice. They are a credit union-backed organization that offers families a smarter way to pay for college through private student loans. And we're going to explain really more. Justin and Trisha will explain what credit unions are, how they operate, how they are different in offering student loans compared to more of the traditional private student lenders. And that's why we were excited to bring Dustin and Trisha tonight to really explain what's different about working with a credit union, because there are differences and there are actually some pretty important benefits that people should know about as they're researching student loans. So let me introduce Dustin and Trisha, and then we're going to get started with the slides tonight. So Dustin Lindberg is Vice President of Growth Marketing at Student Choice. He has been working there for 14 years, so a really strong veteran. And before that, worked directly at a credit union doing marketing and student loans as well. And Trisha Poplasian is a Student Choice College counselor since 2015. And Trisha does a lot of webinars and personal outreach, connecting with students and families to really help them understand the college finance aid process and help families and students make educated decisions about how they can cover the costs of higher education. So we have two great experts tonight who are going to help you understand student loans, credit unions, and answer whatever questions you have. So with that, Trisha and Dustin, if you also want to share a little bit more about yourself, feel free. I know we're going to talk about Student Choice and credit unions, so you know, you might want to save that, you know, as we get to the slides on that.
Yeah, sure. Thank you for the intro. We'll give Trisha some time to introduce herself. Here we'll be bouncing back and forth so nobody gets too sleepy at 8:30 Eastern. And yeah, thank you for the great intro. I was going to introduce myself as the poster child for what not to do when paying for college. It's been a while, as you noted, thank you, since I paid for college and paid for grad school, actually. But I made every mistake in the book. I can tell you that much. And thank goodness I had a good core group around me and my mom to back me up and help me through it. So I know you're all probably out there in a very similar situation. So I would have loved to had Trisha sitting across from me at that point in time. So. Happy to be here with Trisha. And Trisha, I don't know if you want to introduce yourself.
Oh,
And
Trisha,
you're
sorry.
on
So
mute,
you
Trisha.
got you. Yeah, just unmute yourself.
There we go. Sorry about that. Good evening, everyone. Thanks for attending. I'm excited to get started here. Yeah, I've been with Student Choice for 10 years, and before Student Choice, I actually came from credit unions. So I have a very strong credit union background as well as student loans. And my day to day is just I counsel families all day. That's what I do. Have one-on-one phone consultations and walk them through the financial aid process, beginning, even in with high school students all the way through the FAFSA and then the beginning year of college, and then even when they graduate, if they have to refinance and repayment. I do have some personal experience. I have two sons that I put through college. Quite a bit of difference though, because there's 10 years difference. So it was quite different with my first son who attended college versus my second son. Tuition, skyrocketed. Student loans changed a little bit. So, but I do have that personal experience as well, which really helps in my day-to-day counseling sessions. But I'm excited to be here. Thanks, Debbie, for allowing me this opportunity, and I look forward to helping guide some people this evening.
Great. Okay, so I think we have some good slides with information tonight. We're gonna get going with those, but again,
Yeah.
please feel free to put any questions that you have in the chat. Tonight's agenda, you're going to learn a little bit more about who Student Choice is, what the realities, which unfortunately too many of us already know, what the realities of college costs are today, um, what types of gaps there might be in aid, and understanding what your options are to cover those gaps, what the credit unions are and what the difference is between taking a loan through a credit union versus other private lenders. I love this term. I got to tell you, I just kind of like came upon it the other day when Trisha and Dustin and I were talking, an education line of credit, and they are going to explain what that is. Really important to understand that relative to credit unions and relative to what Student Choice can offer. They'll also show a demo of how you can use their site, which I think will be really helpful. And then, of course, we're going to try and answer as many questions as we can.
Yeah. Well, thank you for kicking us off, Debbie. Really appreciate that. And for us at Student Choice, I think probably who are we, why are we here is important. I'm here, like Debbie mentioned, VP of Marketing over at Student Choice. That means a lot of things, jack of all trades, ace of absolutely none of them. But I am a two-time user of a Student Choice line of credit, so I've got some experience there as well, and as does my wife. So we're probably featured on a testimonial somewhere back in the past. But Student Choice is, if you kind of want to think about it in terms of other companies that are out there, almost guarantee you've never heard of us. We are a company that works in the background to help credit unions really change the lives of their members when it comes to financing higher education. So we help them offer the unique education line of credit. We help them plug it in and make it work, right? So we do all the work on the back end that really allows credit unions to get in front of their members and educate them with resources like what Trisha offers, so that we can help them help their members, right? So for us, we've been doing this for 17 years. We've never really advertised the name Student Choice. That's never been the point. The point has really been to lift up and elevate credit unions so that they can help more members. And in credit union land, a member is you guys, the folks that are using the products and services. So you'll hear that term come up a lot. Student choice, then, a few years back, we decided we were sort of tired of seeing the same names out there all the time on all the comparison sites. It seemed like there was every consumer ended up on a comparison site, and we decided that credit unions needed a seat at that table. So that's when we decided, hey, we'd go ahead and bring credit unions to the forefront and try to get the word out about what credit unions offer and why that is impactful for families. So for the last 17 years, we've been working with credit unions, and we work with 212 credit unions across the U.S. So no matter where you live, no matter where you work, we can help you find a credit union that you can borrow from. So we've got some great lenders out there, some great credit unions, and Tricia will sort of talk a little bit more about that later as we go through. Over the last 17 years, we've helped 132,000 plus families. And that carries a lot of weight for me. That's a huge number. And to do that, each and every one of those credit unions is working with each and every one of those individual families. I think that's so huge. Uh, Something a lot of folks don't talk about, we've actually had 50,000 plus loans paid off. That's the end goal is to actually pay these things off. I think that's something we should focus on is really how can we help set you up for paying for college, but then make it affordable to be able to pay that thing off. So we're really proud of that, and that number grows every day. We're so happy to see that grow. So for us, this is kind of the foundation of what we do is bring credit unions to the forefront, help them offer the products and services that their members, their borrowers need to pay for college, to refinance, and to pay it back. So that's sort of what we're all about. Um, as we dive in here to the real cost of college, we'll explore credit unions a little bit more down the road. Tricia?
Thanks, Dustin. Yeah, let's talk about understanding the real cost of college and really diving into the cost of attendance. This is something that we talk to our members and consumers about every day because it's really very important to understand that COA or cost of attendance. And it's going to be based on the college or university that you decide to go to. And it's so essential for students and families when they're planning financially and planning those financial budgets to understand what their unmet need is and also what fixed and flexible costs are. And we're going to get into that in just a minute. So understand that the cost of attendance, it's the maximum amount college is going to cost for one academic year. We like to call it the sticker price of the college. Doesn't mean that you have to borrow or you're going to pay out of pocket that amount of what a cost of attendance is. It's going to include tuition, fees, housing, whether it's on campus or off campus housing, as well as meal plans and indirect costs such as transportation, insurance, books, and we'll talk a little bit more about that. So first of all, let's talk about fixed cost or direct cost. And what does that mean? Those are costs that are going to be paid directly to the school. They're usually costs that are non-negotiable, right? You're not going to be able to really negotiate the tuition or the fees for a certain class or program. Also, housing and meal plans we put sometimes here, that may be a fixed cost because there are some instances where, for example, there's a college, I know Franklin College, they require that all freshmen live on campus. So they want all freshmen to live on campus. So that means they have to pick out housing, on campus and a meal plan. So that's kind of built into that cost of attendance already, paid directly to the school. That's a direct cost to the school. So that would be considered a fixed or a direct cost for family. Flexible costs are going to be, again, housing and meal plans. So for instance, if you live on campus in a dorm, you may have 3 or 4 different meal plans. Doesn't mean that you have to go with one of those meal plans, you can just decide, okay, here, this is how much we're going to budget and this is what you're going to spend. Also, living off of campus is going to be a little bit, maybe even cheaper than living on campus, especially if you have a roommate. For example, I told you, both of my sons went to college. My oldest son lived in the dorm on campus the first year. The last 3 years, he lived off of campus, and we were able to save quite a bit of money. So we didn't have to really look at that cost of attendance and that housing plan that was built in there. We were savvy and we were able to plan financially and budget and not spend as much as we thought. Insurance, this is something that most colleges and university want you to families to pay. You don't necessarily have to do that, right? As families, we have that built in, right, personally in our home. So that's a negotiable or flexible cost that you could consider before you think that you might have to, borrow money for that. Books, you can be very savvy with books. You want to consider that, though, when you're planning your budget, because books are very, very expensive. But you don't really want to go into the college bookstore, right, and buy a brand new book. You can get them off of Amazon. There's used bookstores. There's upperclassmen. Maybe you can share a book, and a lot of books are online now as well. So be very savvy and creative when you're looking for that. And then transportation cost. This is going to vary, right? It's going to vary between college. If you're, out of state, in state, do you have to, buy plane tickets? Do you have to have a car? But you can, again, be very savvy and be mindful when you're planning those costs and in your budget. But it is definitely something that you want to consider. And I just mentioned that it really depends on the cost of attendance, depends on the college that you're going to. In today's market, a private college, the average tuition is $58,600 a year, and a public or state is $28,000. So again, that's all going to depend on, where is the college located. Sometimes a college that's located in a rural area could be a little bit more expensive than a college that's located in the city. But so all of these things can determine the cost of attendance. And as families and students, when you're preparing to go to college, it's so important to understand this so you can plan financially your budget, and then also figure out what your unmet need is. And then if you do have to borrow smart. So what are your funding options? So once you've determined that cost of attendance and what you're going to, either pay out of pocket or what you're going to have to get a loan for, or how are you going to fund this college education, right? So you want to think about, first of all, your free money. So what's your free money? Scholarships and grants and work study programs. So scholarships, we call it time, energy, and effort, right? It's free money, so you're going to have to work for it a little bit. So start early. For those of you that are on the call and you have high school students, really the junior year in high school, I think that's a prime time to start looking for scholarships. Even if you don't know the college that you're going to attend, look at those colleges, look up the websites, their financial aid office, see what scholarships are available, understand, how do I apply? How do I become eligible? What do I have to do to get that scholarship? And that's just with not the schools, but any scholarship that you apply to. Understand, and you want to follow directions. Because people that I am on a scholarship award committee, so I do judge and we look for every little thing. We want applications that are completed correctly. If you have to do a video, picture, so there's a lot of variation that goes in there and a lot of work. And remember, it's time, energy, and effort, or called T time. Grants, a lot of these grants come from the federal government when you complete the FAFSA, but there's also, when you complete the FAFSA, you're seeing if you can qualify for college, federal or state aid. So some of those grants might come from states. And remember that scholarships and grants, they may be for 1 year or they may be for 4 years, and there may be eligibility requirements. But you want to definitely look at those first. And then the work study programs, these are programs that you can find out and apply for through your school's financial aid office. They're great programs. You can work a few hours, get a little extra money in your pocket. And a lot of times it's within the department that the student is studying, what program they're in. So they can, maybe get a little experience while they are working. Okay, there we go, Dustin. Thanks. I lost you for a minute. So after the
Oh,
free,
are you good? You're back?
yeah, I'm good. Thank you.
Perfect.
After the free money, the scholarships, grants, and work studies, you want to consider federal loans. So there's federal direct student loans for undergraduate and graduate students, and then there's federal plus loans for parents of undergraduate students and also graduate students. So those are something that you want to, they're usually low interest rate loans. They do have origination fees, and they are you go through the Department of Education to apply for those, and the free application for federal student aid is required for federal loans. And then last but not least, you want to look at private student loans. These are options from credit unions, banks, fintechs, or other online lenders. A lot of people, like we said, I talk to families all day long. And one of the biggest questions is, Tricia, should I do a Parent Plus loan or should I do a private loan? And a lot of people are looking at private loans because of interest rates right now, and the fees that the federal loans do charge. So private loans are a good thing, but you still want to consider your free money, your scholarships, grants, and your federal loans because of the benefits that are available to you. So let's go ahead and dive in a little bit more about private student loans. Again, this is going to fill the funding gap that your other sources of aid, like the free money and federal loans, after they've been exhausted, or at least compare. Like I said, a big question, $1 million question is, should I do a plus loan or a private loan? Understand that there's tons of lenders out there. We're here to tell you about our product, our education line of credit. We'll get into more of that here. Dustin will share a lot. I will share some more information, and understand that all lenders are not equal. And so you want to compare all lenders that you can before you make that borrowing decision, because you want to borrow smart, right? You want to borrow at the least amount that you have to. And when you're searching for a lender, you want to compare what? Rates, repayment terms, other products offered. And again, all student loans can cover the tuition and fees, room and board, textbook, housing, whether it's on campus, off campus, technology, and more. So the terms of the private loan, again, we talked about selecting your lender, also means choosing those benefits. Every lender offers a unique program. You want to be informed. The private loans are in the student's name, and they may require a co-applicant. They're available to both undergraduate and graduate students. No financial aid is needed. The FAFSAs are always required, the free application for federal student aid, but it's not required if you want to just go the private student loan route. That's fine. You do not have to complete the FAFSA. And there are some families out there that do that. Repayment on private loans begins 6 months after you graduate or separate from school, which does include if you drop below half-time status. While you're in school, attending school, you can defer the full payment, make interest-only payments, or you can begin immediate repayment. There's no type of prepayment penalty. And the repayment term varies and depends on the lender, and it's typically somewhere between 10 and 25 years. And also the interest rate, whether you choose a fixed or variable, can also determine that repayment term. And
Debbie, before we jump forward, are there any questions for Tricia? That's a lot of good info in leading up to the big decisions.
I was just getting
No,
ready to ask.
yeah, no, not yet. I think I'm sure they'll be coming.
Yeah. They always do. Well, I get the pleasure of talking about something that is near and dear to me. I've been in credit unions for now 20 years, which is just wild. I can tell you after getting out of college, I never thought, you know what? Credit unions, that's the thing for me. But I am very excited to share about it, and I'm so happy to be a part of this industry and this sort of movement that's getting bigger and bigger. So, for those of you that are not familiar with credit unions, they are not-for-profit, member-owned financial institutions. So, all of those things are important. Financial institution, of course, they do all the typical banking services and financial services you'd expect. I mean, literally everything. There's nothing that credit unions don't do. You can access them in all the same ways you would traditional banks. A lot of them are doing some really cool things with fintechs and financial technology, doing some really innovative stuff out there. So, of course, the financial part is important. That's what we're here for. The other two are really important. So non-for-profit is huge because credit unions exist to serve their members, which are the people that belong to the credit union. The people that borrow or deposit money there are owners of the credit union. And what that means is the credit union operates to serve them, not to make profit for a shareholder or a stockholder, right? Any profits are returned back to those members in the form of better rates, lower borrowing rates, things like that. So a very important difference that sort of sets credit unions apart from traditional lenders. The second part is that member owned. So when you borrow from a credit union or deposit money there, you get an auto loan or buy your house or get a student loan at a credit union, you own a piece of the credit union, literally own a piece of it. So that changes the way that credit unions serve members and they think about their customers, they think about their consumers. First and foremost, I think is really cool is they do focus on service and the community. Credit unions are all joined by a commonality of something that's similar, whether it's military or somewhere you work or someplace you live or a college you went to or that your student is going to. That sort of brings the whole community together. That's what credit unions are focused on, and that's really what they were born out of is serving someone with a common interest, a bond that tied them together. Now they're out there, they're regulated just like banks, so of course, just as safe and secure as a traditional bank. Money does tend to stay local then with the credit unions as they're rooted in the communities. And once you become a member, you can always work with that credit union. So once a member, always a member. You'll see that on lots of credit union sites. But that's huge because I think the way that credit unions look at products and services is a little different, right? They're not beholden to making a bunch of money. So when they're thinking about student loans, they don't think, hey, let's go out and push for profit. Let's do something that's really innovative and cool for families, that we can go out there and do something different that might actually impact folks and help them save long term. Um, I won't read through this. Of course, everybody has great reviews and really cool things that people say. And maybe when you get the recording, you'll pause it and read some of these. But this is what we live for. This is the stuff that makes it matter. These are real people, real borrowers and co-borrowers, parents and students that have gone through this. And I was one of these. My wife was one of these, and I can tell you, it's an easy process. It's one of the reasons I like it so much. Uh, why I bring this up is that sort of gets us to the point of what's going on out here with credit unions and why are we trying to elevate them and bring them to you guys? Why are we here? So this is a chart. I promise I'm not going to read this whole thing, but this sort of highlights the differences between a traditional bank or fintech and a credit union. Lots of the things I sort of already touched on. So this is a good reference if you get the slides afterwards or you pause the video on this. But it highlights the differences. And again, why do we care? Why are we here? This is something credit unions created that did not exist in the market, this unique education line of credit. And the absolute huge benefit of this is you apply one time, literally one time. And I can tell you, having done federal loans for both undergrad and grad school, having friends and family go through it, it's huge. It's absolutely huge. And like Trisha said, you're going to have to balance what you get in scholarships and grants and tuition discounts and federal loans. But this is an alternative to a traditional student loan, a traditional private student loan, where you go in and you're doing things every year. And what I think is really huge about this, and what really resonated with me, is traditional loans often force students to estimate the full cost of attendance up front. That's so difficult to do. That is one of the scariest things. The expected family contribution, part of that. Tell us what you need this year. That's so hard to come up with, and financial situations change. Academic paths changed. You don't want to know how many majors I had. They change. So it's traditionally the private student loan landscape is kind of broken. And what we wanted to do was, instead of forcing folks to guess what they needed, that can lead to over borrowing. I'm going to borrow way more than I think I need because I don't want to come up short. Coming up short is almost worse than over borrowing sometimes. The anxiety of it is, at least. So what we did was create this line of credit that said, hey, borrow when you need it. Go out there, apply one time, set up your line of credit. It works just like a traditional revolving line of credit, like what most folks are traditionally exposed to. Uh, what we do then is we set your account up for the entire college experience, right? The entirety of undergrad or grad. And you just go back every year and access those funds. They're your funds. It makes it fast and easy. I'm not exaggerating. You can definitely go test this. But as somebody that used it, it's literally log in. How much money do you need? Submit. And that takes off so much stress. So having done it, I used to tell people about this, but having done it, it's huge. And that really takes the stress out of that reapplication every single year. It's one less thing. And thankfully, my kids are still young. I'm not stressing about it yet, but it looms in the future. Um, there's no interest on anything you don't use. We approve you for the cost of attendance, and then you just come back and get it when you need it. So we don't charge interest on anything that you're not using. It's only what you're using, and it gives you the ability to go in and sort of adjust those levers. You want to pay it down early? Great. It's your line of credit. Pay it down. If you want to take some out to cover those additional educational expenses, great. That's why it's there. So for me, that line of credit is really one of the biggest things that sets credit unions apart, and what they're doing differently in this industry or in this market to help students.
Dustin, can you explain before you go on? Because I think a lot of parents who are here tonight are just
Yeah.
new to this whole process. And I'm not even quite sure that they understand how often they have to apply and to what types of loans. So, so maybe if you can explain about federal loans and how often you have to apply for those. And you still might need to apply multiple times for the federal loans, but if you were taking a traditional private loan, when would you be applying, and how does that compare to what you just described?
Yeah, well, it's been a few years since I applied, so maybe we'll let our resident expert, Tricia, handle that one. But um, yeah, I can certainly speak to the line of credit after you're done, Tricia.
Sure, I can take that. Thanks, Debbie. So federal loans, of course, the FAFSA is required. So that's the first step. But then after you get your award letter and you accept the federal loans, now, really, I always say now is the time to apply, right? We're in the middle of June. So the applications for the 25-26 academic years available, federal and private. And with the federal loans, you're going to apply once a year. So each year you're going to apply for the federal loans, and then you're going to renew the FAFSA, and then you'll apply for the federal loans again. And then Dustin, you want me to just go ahead with the private loans as well, or?
No, absolutely, yeah.
Sure. And then with private loans, now is the time to apply. Keeping in mind for everyone on the phone, after July 4th, that first weekend, that we call peak season. So that's when everybody's applying. Schools and lenders are extremely so this is a good time to apply. With private loans, you're again, if you go, with a traditional private loan, you're going to apply each year at this time. With our line of credit, that's one thing that I love. My favorite thing is right now, families might not know how much they need. They can go ahead, apply for the line of credit, get it set up now, have everything approved. Then come July 15th, when they get that bill or that they know their unmet need, as Dustin said, it's just as easy as logging into their account, hitting draw request, and putting in the amount that they need. And then everything, happens behind the scenes. So again, so federal student loans, you're going to apply for once a year. This time of year, you can actually start in May, as well as with most private loans. So once a year for the federal loans, traditional private loans, once a year with our education line of credit. You apply the first year, and then every academic year after that, you simply log in and complete a draw request.
Yeah, that's a great reminder, Trisha, of apply before you know. That's hard. I was talking to one of my family members a week or so ago, and that was one of their challenges. Like, I have no idea. I have no idea how much I'm going to have to borrow, and that is a huge benefit. You can go out, you literally apply, get approved, and your account will sit and wait for you. And then when you're ready, you log in and tell me, hey, we need, whatever for this year or this academic term. So
So
that's
somebody is asking, is the line of credit only applicable if you don't use FAFSA?
no, no, that's a great question. You absolutely are encouraged to go get whatever's cheapest for you. Like I said, I did this, and it was, free, cheap, and gap was we always called it. So free money first, cheap money second, and then borrow to fill the gap. So no, we would encourage you to do FAFSA and go if the federal student loans are priced right and it's a good deal, go get those. If you've got other ways that you can cover the expense, go get that. I would never encourage somebody to go borrow for the sake of borrowing. I want you to go only get what you need. And I think that's something that's really different about credit unions is they're all about being frugal. That's sort of the cornerstone of credit unions is being responsible with your finances. So that's yeah, I would absolutely say do the FAFSA. You don't have to get our education line of credit with one of our partner credit unions, but we always encourage you to go through that step first.
Absolutely.
Yeah.
That's one of my main roles as a counselor. So I am very objective, and if I can help families early, like in high school, help them with the scholarships and finding ways to pay so they don't have to get student loans. So even though we do work with an education line of credit, again, that's what credit unions are so great. They're people helping people, and that's what my role is to be a financial literacy advisor for families and helping them through the financial maze, and hopefully so they don't have to borrow.
Well, I know we got a few questions about some of the different features of the line of credit, and but we put them on the slide here, and again, we probably won't read through them all, and we've got rates on the next slide here as well, so you can check them out. Uh, Disclosure rates change all the time. I mean, gosh, we've all seen what's going on in the market and are kind of watching for the best deal. So the rates on screen there, check them out. Go to the website. They're plain and simple. They're just based on your credit score. That's the easiest way to explain it. Uh, about 97% of all the people that apply and get approved for an education line of credit do that with a co-applicant. 90% of the time it's a parent or a family member. So I would say if it's a student, students typically are going to want to come in with a co-applicant. Again, we see most of the time it's mom and dad out there doing it, or it's a loved one or a family member doing the application and really walking through. But those that actually do go through, get approved, and go through the process will have a co-applicant. So we just take whatever credit's the best. It's okay if the student has no credit, they're a student. So we look at the co-applicant's credit. Uh, when it comes to repayment, like Trisha mentioned, uh, this is a little different. So this is a little different with the line of credit and what the credit unions put together. Uh, Traditional student loans have set repayment terms that Trisha went through. We set ours a little higher. So we give you 20 to 25 years to pay it off. Now, I don't really want you paying on a student loan for 20 or 25 years. Most of these pay off in roughly 10 years, so people are paying them off early. What that does, though, is that gives you the ability to lower that payment. So if you're paying on the federal student loans, you don't need a giant private student loan payment on top of that. So what we do is we spread it out. So depending on how much you borrow, it'll either be 20 or 25 years to keep that payment reasonable. Gives you a little bit more flexibility. again, most people are paying it off in about 10 years,
So,
some much
Dustin,
less.
is that flexible or is that something you have to set when at the beginning of the line of credit, like what your repayment term is, and can you change that?
Yeah, good question. It's automatic. So we set it if you borrow less than $40,000, it's 20 years. If you borrow 40,000 or more, it's 25. So we
So,
keep it simple
and
and
that's different than, I mean, again, and a lot of people on the webinar tonight are just new to this and probably have never applied for
yeah,
a student loan, but that's very different than other private lenders where you have to kind of choose these features of the loan and then they kind of get set. Meaning you can, so you might at a different lender choose a 10-year repayment term. Of course, you can um, pay it off in less than 10 years, but you can't extend it.
right.
So I just want people to understand the differences.
Yeah. My biggest hack for that, and I've been saying this for Patricia's probably heard it for all 10 years she's been here, but when I was at the credit union, I was the guy that represented this product. So I've been literally saying this for 15 years, and it's still true. The best thing, set it to deferment and then pay on it. If you miss a payment when you're deferred, there's no penalty. If you decide you're going to make full payments and you miss one, well, then you're in repayment. So I say typically defer it. If you can make principal payments while you're at it, knock that balance down. That's going to save you on interest long term. That's going to save you on the hassle of paying it back later. And then one thing we really encourage is these are all school certified, which I know this is a lot of information, but basically the school says, yeah, Dustin, you need that money. Here's our cost of attendance, minus your scholarships or anything else. We certify, we check, and we've verified that this money is what you need. We then fund it. The college may give some of that back for that technology fee or, to cover books if you guys included that in your borrowing. We always encourage people, if you don't use it, throw it back on the line of credit. Don't let it just sit and I spend some here and there because you're going to pay interest on that. So anything that comes back, throw it back out there. You get, folks are giving Christmas gifts or holiday or birthday presents, then throw it back on there. So it does give you the flexibility to do that. That's my biggest hack for like keeping that down, and really only borrowing what you need. So repayment options, huge, no penalties. Obviously, Trisha mentioned that as well. Grace period, standard 6 months after they graduate or separate from the school. Uh, there is a cosigner release. So I did mention a lot of these come through, most of them with a co-applicant. So it's on the borrower, but then you are co-signing it. There is a release option. So all the credit unions that are featured on studentchoice.org offer a co-borrow release. The catch quote that's out there is how many on-time payments you make. So 48 on-time payments, and then you can say, hey, request that I be removed. That just transfers it to the student's name. So I say that varies because some credit unions it's 36. They've dropped it, which is great. Some it's 48, so it's a little longer. But the typical is 48, so that's probably what you'll see. But it just depends on how many on-time payments you make. So I like that because you can come right off that loan if you want to get that off your score too. And then it covers everything. It's educational expenses, obviously. Don't go buy a car with it. But we do certify that through the school. So everything runs through the school. When you apply, when your student applies, we hand that money to the school, digitally, of course. And then anything that's returned back for books or housing, if they live off campus, if they need technology or transportation expenses, that would be returned to the student. It's sort of up to the school. Most of them put it in their account, but it's sort of up to each school on that.
So, Dustin, you mentioned that approval is based on credit score
Mhm.
because somebody was asking and wondering if there were income requirements related to approval.
There are income requirements. Each credit union is a little different. Um, I can just tell you anecdotally, they're not crazy. There's nothing that you would go out there and think like nobody's going to get this. It's not a teaser rate. These one thing that credit unions are actually required to do is to set their pricing, their range of rates to where people can actually get them. So it's what you see is what you get. We'll do a little demo of our Finder tool, which actually helps you estimate your rate and payment. You can go change your credit score as much as you want and see what the ranges are. It's all real rates. We're telling you literally what they offer. So if you know your credit score, put it in there. Or if you just want to estimate the range, it'll show you exactly what to expect.
And then Dustin, may I? Oh,
Yeah, I was gonna say, I think you probably had some
sorry.
feedback on the income.
I just wanted to add, yeah, it's very reasonable, the income requirement. And I also wanted to say if there are any graduate students, we actually have credit union lenders that don't require graduate students to have an income. And the graduate, they also have the education line of credit for their graduate program. So I just wanted to throw that out, in case we do have some graduate students on the line.
Yeah, that's a really good point. Debbie, do we have any other questions? We tried to hit all the FAQ that we always hear pop up.
I can, do you have a slide that talks about the interest rates? There are
I
questions.
do.
Okay,
Yeah.
so talk about this, then
Yeah.
I'll ask the questions.
Sure, absolutely. Yeah, yeah. So the rates, I'm going to scroll back. Sorry for the clicking around. Right now, the fixed and variable rates are listed here. The best thing to do is go to the site. It's on every slide, studentchoice.org, and just click Find My Rate. Uh, Put in your credit score, your school, and all that, and you'll be able to see the real rate. That way you can sort of play around with fixed or variable, what makes sense for your situation. Um, this is one we get asked a lot. What should we do here, right? Should we go fixed? Should we go variable? The popular choice is fixed because that feels really safe. Uh, I would do that. I mean, I like safe. So if you get a credit union that has a really good fixed interest rate and you want to lock it in, do that. It's really great because you're going to know that the rate's going to be the same, the payment's going to be the same forever, and that's it. The risk involved is, hey, the market went the other way, and now rates are lower than what you borrowed at. And that might mean that later you want to refinance that and get that. It's just like a home loan. Hey, rates are way down. I'm going to refi. I'm going to save some money. And of course, our credit unions do that too. It's all on the same website. Variable rates, those do adjust when the market fluctuates. So what you'll see is that over time, if you think, you know what, I think interest rates are going to go down and I'm going to watch them fall, then you might get a variable rate and say, hey, I'm going to be repaying this 4 years from now, or in my case, 5, and then the rates are going to be down and you're going to watch it. So it sort of depends on what you're comfortable with. The risk there is, of course, if the index, which is prime, if it goes up, your rate's going to go with it. So that can be the risk there. So you just got to pick the one that you're comfortable with. Debbie, did you have a question on rates?
Yeah, I'm just going back. Oh, so somebody wanted to know, do the rates change each year, or is it only at the time that your line of credit is opened?
That's a great question. Go ahead, Trisha.
So the rates, so the rate is set at the time the line of credit is opened, and they start accruing as soon as funds are dispersed to the school. The variable rate, though, so the index can change, right, weekly or monthly. Our variable rates would change every quarter. So if the rate would go down or up during this quarter, then the first of the following quarter, the rate would adjust at that time. So they can, change more than one time a year. And then our credit unions also have a cap of either 15 or 18%, which is lower from what I understand. Dustin, correct me if I'm wrong, than other lenders. But rates haven't gotten that high in a long, long time. But I did want to add that ceiling is there, and then our rates would adjust each quarter as prime adjusts.
Debbie, does that answer the question? I think.
Yes, yes. And somebody else is asking, and this is maybe they're kind of just trying to make the comparison to a HELOC, saying if you have a variable rate, can you lock in a portion like you can on a HELOC?
I like that idea. I'm gonna have to write that down.
Yeah.
Yeah, currently no.
I get that question a lot.
Yeah, that's cool. That's a good idea. We should look into that. By the time they're in repayment, maybe. No, not currently. We don't, but so you'd want to go fixed probably if you want to lock it in there at a rate, um, and then watch refi rates, right? All these credit unions that you see on the site do offer refinance as well. So keep an eye on those, and when you go into repayment, you just pick the rate that's the lowest, obviously. So.
And two other questions which are interesting. Somebody's asking you about the line of credit. Is it tied to, one person asked, is it tied to academic performance? And another person asked, from the approval standpoint, do you look at equity in primary house?
Trisha, do you want to take that one, or do you want me to jump
Okay.
on?
So no, that it's not based on the equity. Did you say the equity in your primary house?
Yes, yes.
No. Each credit union, they will have a maximum line of credit limit. So it just depends on which credit union that you select to go with. And then what was the first question?
If the line of credit is tied at all to academic performance of the student.
That's a good question. So not at first, not when you get it, but the student, they have to meet the satisfactory academic progress, which is called SAP. So if they don't meet that, then they would not be able, if they have a line of credit that they're using, if they're not meeting SAP or satisfactory academic progress, they wouldn't be able to use the line of credit. And that's with federal loans and as well as with most other private student loan lenders.
Yeah.
Did that answer the
Yes, I think
question?
it did.
Okay.
Yes.
Okay.
Yeah, Trisha, your point about the credit union limits on the site, you'll see what those limits are. Just for reference, the standard limit for an undergraduate line of credit is 75,000. That means over the entire course of an undergrad education, you could borrow up to 75,000 should you need it. We hope you don't, but that is far higher than what we see our average loan amount, which is it just depends on obviously where you go to school, but again, it's based on that cost of attendance. So it's a high limit that is available to you. If you need it, it's there for you, but we're not capping it really low, and then you got to come back and figure it out every year. We really want to cover you from freshman to senior, so you're covered that whole time.
So the other questions, which I know you're actually just about to talk about, is really, do I have to be a member of the credit union, or how do I join, and where do I find the credit union that can offer me the best
Yeah.
rate?
Debbie, I think you're like throwing me these softballs, so I'll get to the next slide. I think that's what it is. You saw the transition. You're like, here we go. We're gonna get them to move
Right.
along. No, that's awesome. That is a perfect segue. Yes, you do have to be a member to get the money. You don't have to be a member to apply. Apply and see what you're gonna get. Go to the site and estimate first before you apply. When you're ready, then borrower, co-borrower will be on the application. So, get your stuff together, and it's super easy. It's the same as every loan application you've ever seen. So get that ready and then go through the process. You do not have to be a member for any of that. What we do is then we work with the credit union to say, hey, Dustin, are you a member? Uh, Most credit unions, it's as simple as doing an online membership where it's, hey, we want you to open a checking account or a savings account. So drop $5 in a savings account, or you may already be a member if you had an auto loan there or something like that. So super easy process.
And
The
somebody
funder,
early
yeah,
early
go ahead.
on in the evening actually said, I'm already a member of a credit union. I think it was in Virginia, but they don't offer student loans. So it's not a problem for that person to then become a member of an
No,
additional credit
No.
union.
no,
No.
not at all. I'll tell you, I love credit unions so much that I'm a member of like five. Uh, I'm a big fan of looking for a good rate, and so if one's got a really good credit card rate, that's where I go for my credit card. If one's got a great student loan rate, that's where I went for that. I refinanced my student loans at a different one because they had a really good rate. So I kind of bounce around. You can absolutely do that. And we do work, like I said, 212 are live as of today. We're always adding credit unions. Their credit unions are awesome. They keep joining and kind of offering the program. So you'll be able to find one. If you're already a member, there is a spot on our site that we'll make sure Debbie has a link to that shows all of our credit union partners. That you could say, all right, well, hey, I know that I'm in Virginia, I'm a member here. Do they offer a student choice loan? No. If not, then we can get you set up at another one.
Uh, and so there's another question related to interest rates, maybe before we move off of that. Somebody wants to just confirm if they decide to commit to the education line of credit now, they actually have a student who's a sophomore. They're just kind of confirming, does that mean that whatever rate they get will be locked in that sophomore year through the end of her graduation?
If they choose the
If they
fixed
choose
rate,
fixed, yeah.
yes.
Yes. Okay.
Great minds, Trisha.
Oh,
Yeah,
sorry.
no, we almost said the same thing at the same time. Yeah, absolutely.
So did you want to go through this slide? I mean, we
Yeah.
kind of covered a lot of
Yeah, we've
that.
covered all of it,
I
I
would
think.
love, honestly, if you guys don't mind, to jump to showing the
Yeah.
site and like how
Okay,
people
good.
can,
Yeah.
That's
yeah,
what
Yep.
that's what I was thinking.
yeah.
Yep, totally agree. So this is a video, by the way, so we can always pause it, Debbie, if you have any questions. But you go to studentchoice.org, you're going to see this. This was literally shot today. We're just going to walk through the demo. Works great on your phone too, so you don't have to be sitting at a desktop to do it. But um, start off here. We're basically just entering where you're going to school. So we'll choose the school. Tell us how much you think you need. We started there with 12,500, which is the average that we see folks borrowing on the line of credit per year. So in this case, we're going to use University of Southern California, USC, one of our great credit unions out there. And for this example, I have fantastic credit. That's going a little quick, so I'm going to just sort of backtrack it a
So
bit.
somebody's asking in that field about how much do you need? Do you just put in what you need for the first year, or is that where somebody's estimating what they'll need for the 4 years?
Yeah, great question. It's a calculator, so you can put in as much or as little as you want and just see kind of what feels right. That is just estimating based on the entirety of your school. If you don't know how much it's going to be, if you know, hey, my school is going to cost 50,000 over the course of 4 years, I would put that in. Um, I
Okay,
would
so
shoot up.
so it is basically for the 4 years, an estimate
Yeah,
of what they think they're
yep,
going to need. Okay.
exactly. If you're in a situation where you think it's only going to be for 1 year, just put that in. But and remember to take out if you got scholarships, grants, or if you're taking federal loans, just notch those out. And you can go back and change this. It doesn't lock in anything. It's just a big calculator that just helps you estimate. So for this one, like I said, we're going to use USC. On this screen, really important. I don't want to do a credit pull for you guys. Just click where you think your, your credit is, and we'll tell you your rate. There's full transparency with credit unions. We do not do a credit pull to tell you your rate. Like, of course, we're going to send you an email with all your links to get back and all that fun stuff, and you'll get an email from me saying, "Hey, thanks for doing this. Here's your link. Come back." I mean, that's marketing these days. It's all about bombing you with emails, but uh, that's all you got to enter. You don't have to go do a credit pull, soft or hard credit pull to get your rates here. So if you think your credit score is an 840 plus, awesome, click it. If you find out it's an 825, well, then you click this one. If you
So is
uh,
it at any point in the process is your credit report pulled?
none at all on the website. Once you start to apply,
Okay.
as you do the application, yes, then it's
Okay,
pulled.
okay. So
Uh,
this is really just to give people,
mhm,
an estimate of what the rate is that they will
exactly,
get. But
exactly.
ultimately, when they say, okay, yes, I'm truly applying, their credit
Mhm.
report will be pulled at that point.
Correct. Yep.
Okay.
So we take you for your word for it, and there's a link down there too if you want to go get your credit report, from any of the free finders out there. But um, most of your financial institutions are giving that to you anyway. So um, choose what you think. If you mess up, no biggie. Go back and change it as many times as you want. It's really just a big estimator. So we'll click 840 here, and these are real rates based on really what the credit unions are offering and really based on their credit tiers. So you're getting real estimates here, not teaser rates or anything like that. Um, Enter your address here because this helps us look, and we're just looking at it by your zip code area. This helps us locate you, right, based on where the credit union serves. So we are helping find credit unions you can actually join. And then obviously your email is going to go in here. On the next screen, credit unions are really cool because they also serve people based on where they work or where they worship. So there's affiliated organizations in here. If you work at or worship at one of these organizations, that could open you up to new options, some of which might have really great rates as well. So check out your options there. We got a massive list, thousands of employers in there. Then we're going to do your estimate here, crunch the numbers, and give you real rates on screen. So you'll be able to see if you match on the school, if you match on where you work, or if you match on where you live. And it'll tell you how far away if you are and things like that. Um, Once you compare, you'll see literally this screen. Compare your rates. You can flip back and forth between fixed and variable. You can look at your payments. You can look at all that stuff and just pick the one that's right for you. Uh, Once you do that and you say, hey, I'm ready to get started, you're going to see a pop-up. That's the application. So that after this, if you go and apply, that's the credit pull. So up until here, it's all just been on the website on our calculator.
Got it. So, Dustin, I'm just passing this along. There's a few people here who are kind of getting tripped up in the field that asks how much I need. And
Sure.
one woman said they can't get past 3 digits, and somebody else said, oh, they had to put in a comma. So that might be something.
Yeah, that sounds weird.
Yeah.
We'll definitely look at that and make sure that that's good to go. But yeah, just estimate whatever you can there. And Debbie, I'll send you a direct link too that goes right into the Finder tool. That way they can sort of skip ahead too.
Okay, that'd be helpful.
Yeah, make it easier on folks.
Okay. Lots more questions. Do you mind if I ask?
Fire away. Yeah, we've
Okay.
covered a lot of this stuff. So
A very interesting question. Somebody's asking, does the line of credit, could it impact their need-based aid?
could it impact their need-based aid?
Like,
It's are
meaning
you
like for like the following year, if they're
oh
applying for need-based aid at the college, and then the college sees, oh, well, you got this line of credit.
no, it doesn't show as a an asset out there that they're gonna pull against. It's just available to you. It doesn't actually show until you actually use the money. Yeah, good
Right. And
question.
you don't, yeah, and you don't list it on the FAFSA anywhere. So yeah, that is a great question.
Yeah. Somebody else is asking about these loans be used for 6-year programs like direct admit programs to pharmacy school?
Yeah, yes, they can. It gets just a little tricky that when they transition from like the undergraduate, because they're graduating with a graduate degree, correct? But yes, they can be used for that. You just want to really, what we always recommend is just check with the school when that transition is going to happen for that academic year, and then work with us and let us know that that transition is going to happen so we can do what we need to do behind the scenes. But absolutely, it can be used for that.
And another question, also interesting, if you have multiple children in college at the same time, do you need 2 separate lines of credit? Can you use one?
You need separate, so it's per student.
Okay.
Yes.
Mm.
And yes, but that is possible. Some credit unions do limit the co-borrower amount that they can borrow, but usually it's up to where if they have 3 children, they could get 3 different lines of credit.
As a parent, you'll have one account though. That way you're seeing it all in one place. The student then each student could go in and see their own account, but you will
Good
have one
point.
account that is yours with all that in there.
Good point.
Are there any circumstances under which a student can get a loan without a cosigner? There are some lenders now that,
Yeah.
if a student is a junior or a senior in college, has some work experience, they're able to get loans without a cosigner. Is that a possibility with any credit unions?
Yeah, absolutely. I was waiting on you, Tricia, on the
Oh, yeah.
we do have some special um, features where, like if you're coming back or you need the last semester or something. But full transparency with credit unions again, if you're a student and you have the credit 660 or above, you can get it on your own. Uh, Sometimes that's hard with if there's an income requirement or a debt to income ratio or something like that, where you just are not set up financially. But a lot of students are doing this on their own, or if you're like me, you go back and you're not 18, then you do it on your own. So yeah, it's definitely possible, and a lot of folks do that. It's just more common with the traditional student to have a cosigner or a co-applicant.
Yeah, and I've talked to a lot of students that have been juniors and seniors though in college, not so much
Right.
freshmen and sophomore, but juniors and seniors, yes, if they've worked and they've got that income and that credit history, yes, it is possible.
Can you maybe just review, you mentioned the credit limit. I'm sorry, yeah, it was the credit limit. And is that per line of credit, per parent? Is that for all 4 years? I think you had said it was at 75,000.
Yeah, the program starts off like if a credit union was just literally plug us in and go. Some change it, right? They go higher or a little bit lower, but yeah, the standard program 75,000 for their degree. So that would be that for an undergrad degree, and you can go up to 5.5 years, Trisha? Is that right?
Yes.
Because I know I got covered, so
Mhm.
you go that long on that, and that would be your 75 for that whole window. If you then go back and you're going to go to grad school, that's a whole different window of time, right? And those, since grad schools are typically a little pricey, those limits are even higher. Um, but that would cover you for, all 4 academic years, the entirety of that, and up to whatever that limit is. Those are all listed super clear on that search tool, so you can see if any are limited, but they're all really high. So
And can each parent have their own
Mhm.
loan with the student
Yeah,
separately? Okay.
yeah,
Oh, for the same
two different
student?
co-borrowers.
Yeah, for the same student.
Oh, okay.
Yeah, they can't have the student cannot have two lines of credit over $75,000. So $75,000 is the limit per student.
Okay, got it. And actually, somebody asked this question earlier on. Does a student need to be involved in taking out the loan? Because there are products out there are called private parent loans. So
Mhm.
if a parent wanted to be the only one responsible, could they take out the line the education line of credit?
Some of our credit unions offer that, but it's pretty few and far between. It's
Okay.
Yeah.
it's definitely more traditional for the student to be on it. What we always look at is, since this is a line of credit, as if you defer this and you are making payments, those payments are going to show up on the student's credit history. So it's going to start to build that history. So in that way, it's a good history to have. I'm not suggesting that you should borrow like crazy and then go pay it off, but those are typically what we see, is that there's a student on it. And then at the end, the parent may come off of it, or the credit unions we work with do have a parent refi, where if the parent said, "Hey, I got this," they can refi it all out of the student's name and take it out of there and pay it off, or vice versa. The student can take it from the parent and go that way.
Okay. And then just to clarify, because somebody is asking, just to be clear, who the borrower is and who the co-borrower is or co-signer.
The borrower is the student, and the cosigner can be a parent, a friend, a mentor, a grandparent. It does not have to be the actual parent. But the
Right.
student is the borrower.
Okay. Yeah, just seeing what if we've missed anything. Oh, another interesting question. Does a student have to be 18?
They have to be the age of majority in their state. So some states are a little lower. I can't recite them off the top of my head, but as long as they're age of majority in their state, that's when they qualify to apply. Yeah, good question. Tricia, is there anything that if the student is below that when they start college
We
and
do
start
require
school?
that they have a cosigner if they're under 18, whether, they're in the state and that's the age of majority or not.
You guys have some good questions.
I
These are
know, right?
well, like I think we need to add some more info to our FAQ.
Oh,
And
so
we should mention we'll be on chat next week, right? So
actually, that's a great reminder. And we'll put this in the follow-up email. But for those of you who haven't already joined, a lot of people I'm sure who are here tonight are also members of the Paying for College 101 Facebook group. You can definitely ask questions in the Facebook group, but we've actually also created a separate chat, which is part of the group called 2025 Student Loan Chat. And next week, people from Student Choice will be on the chat trying to answer these questions or any other questions you have.
yeah.
So that's just like another resource to help, get you through this.
And I should mention, obviously we're getting close to, I'm not even sure what time it is, but if you got a question, these are really good questions. If you have questions, we're available via email and obviously the resources on screen there, and we'll make sure that we're available to answer those. And obviously Debbie will make sure we get those afterwards and we answer all the questions. And I know Debbie's awesome about just communication in general, so we'll make sure you get the answers you need.
Absolutely.
Somebody's asking, would you suggest using a separate credit union if there is one specifically for the school that the student's attending?
I would pick the one with the lowest rate.
I know, that's what I was going to say. To me, it's all about, I mean, I say
Yeah,
this all the time to people. This is shopping,
I know.
and people will say, what's the best
Yeah,
lender to go with? And this is not against, student choice or anything, but it's an
yeah,
exercise in seeing
yeah,
where you can get the best rate and
yeah,
all the other features that are important to you for that
100%.
loan.
Yeah,
That's really what it comes down to.
yep, 100%. That's exactly what we tell people too. And we get folks that they start on the comparison sites. I mean, that is the world now. Is we're out Googling, and half the time I'm asking Chat GPT what I should do. So go out and compare. Yeah, absolutely compare. The only thing we see different is that what you see is what you get with credit unions. They don't play the teaser rate game. Their really good rates are for a huge band of credit scores, which I think is awesome. So, real people can get really good rates. But tweak the rates in the finder, and you'll be able to see exactly what their pricing looks like. And just keep in mind, be realistic with what your credit score is, or go to your bank or credit union or credit card, or go get a free credit report. And check it out. Know where your credit is, and then go shop like crazy. Yeah.
Yeah, that's a good point. If you don't mind me, I know we're limited on time, but I wanted to add, you said something about the rates. Because a lot of places you'll see that low introductory rate of 4%, but actually when you go and do the application, some lenders require you to open an account. You have to do like 4 or 5 steps to get that low end rate. Credit unions don't do that. It's based solely on the credit score. And you'll see tiers, so it just depends on the low and the high of what your credit score is, and that's going to determine your rate. So I think that's very important for people to understand as well.
Somebody else is asking, is there anything that they need to consider if they're, looking into a loan from a credit union if their student is going to out-of-state university? It really doesn't matter, right? Whether you're going in-state or out-of-state.
No, no, you're right. Yeah, it's just totally just credit. So you should be good. Yeah, I would check. Actually, this might be a good answer to that. Check their school and the rates that might be associated there, and if they're having different addresses, try that, because credit unions do serve neat little bubbles, and we've plugged all that into our tool. Uh, you should be able to enter the school they're going to and cover that area, then your home address and cover your area. That way you get the best rates of both. The rates we had on the screen are for credit unions that can serve the entire country. That way we know you're able to get that rate. But there are cool credit unions out there that offer like neat little pockets that we didn't want to show like an ultra low rate and then like 3 people in the U.S. qualified for it. So,
Mhm.
um, but if you're one of those 3, we'll find it for you. It's really cool. It's a good tool.
So I knew this might be a concern. Somebody is asking that their student is going to a school where tuition is over 75,000 for 1 year. They said not that we're going to borrow all of that, but if their concern is that they might need more than 75,000 for the 4 years. Is there any way to expand that if necessary?
There are a lot of credit unions that offer special programs for some of those universities that are really high end. We've got a lot of credit, and we don't typically put them all out on the Finder because of, I mean, we don't want to push people to, massive amount of debt if they don't need it. Um, but if it's a school that we partner with, a lot of them have really cool programs for, like UCLA has a really good program. There's some really great grad schools out there, and some Ivy League schools that we partner with that have special programs for students there at those universities and in those programs. So they are definitely aware that the prices are not typical and that it's going to take a little more, and they adjust accordingly. So uh, that's probably one of those we want to help you look for and find the program that fits you the best.
So
Absolutely.
I'm just curious. I mean, again, we're gonna have you guys in the chat next week answering questions, but how do at some point, like, how do people work with Trisha if if they need to or want to?
You can, on this slide right here, where to help the borrower resources. So it's best to so you can either ask a question or schedule an appointment. However, this is the busiest time, so I'm pretty booked up. But if they would just shoot me an email. So if you click on this link here, you can ask a question. It says ask an expert. I don't know why they call me that, but that comes directly to me, and I manage that every day. And I can honestly say that you will get an answer the same day or within 24 hours, depending on, if it's the weekend. Of course, I don't work on Sundays, right? Or, at midnight, but I
You ever
am.
get time off, Trisha?
Yes, I do. And I do work, late hours during this time of year, however, I can honestly say that I answer within the same day, before the end of the day, or within a 24-hour period. And if I see that you have a lot of questions, I might say, hey, would you like to schedule a phone consultation? And we could definitely get something on that's 30 minutes. It's a free consultation. And usually we can cover their questions and needs within that 30 minutes. But absolutely would love to help anybody. So yeah, just send the question my way, and then we'll decide if we need that one-on-one consultation, and we can get that set up and scheduled.
Okay, one last question, which is a little bit of a repeat, but I think it's worth repeating it for people. Somebody is asking, if they estimate what they need for that line of credit, they just are confirming they're only paying interest on what truly is dispersed. And then if they end up not needing the rest of it, that it's just not used.
100%. Yep,
That's
that's
correct.
absolutely correct. Yep. And what you put in the Finder doesn't impact what you borrow. That's just a tool to help you estimate and understand what's going on. So when you go through the application, it'll ask you if you want to borrow less. It just defaults to that max available. But yeah, you never pay interest on anything that you don't borrow. That's kind of the beauty of it. That I think we started with that, and now we're ending with that. So it's great.
Well, thank you so much, Trisha and Dustin. I think that this was really valuable for the people who were here. I can tell by the questions that people are kind of like it's churning in their head about how this works. And let me just emphasize to everybody that this is a perfect time to be kind of going to the Student Choice website, fooling around, doing what Dustin said. Hopefully you know what your credit score is. And that is, I got to tell you, the one thing I try to impress on people, to look at their credit score, honestly, like 2 years ago, to see if they could, what it was to improve. But, unfortunately, there's probably not much you're going to be able to do to improve your credit score in the next, month or two. So, but, if there might be somebody else in the family who has a better credit score, you can be fooling around about, who should be the co-borrower, and see what the rates are, see what the potential credit unions are that you could go with, and start like shopping around and comparing. And I personally love the idea of the education line of credit. It gives families so much peace of mind and flexibility. And boy, I mean, those are two, kind of features
Those are
that you don't,
commodities right now. Yeah.
get that much in this process.
Yeah. Well, your crew had an awesome amount of questions. I love them all. They're all really good questions that I think sometimes it's nice to hear the questions, and the Q&A is probably better than anything we presented. So,
Right.
yeah.
Right.
Yeah. Well, we're here for you. If you need anything, let us know. And like I said, Trisha's a great resource, and we've got a whole team of folks that, if it's not super specific to something that Trisha can only handle, if it's an application question or a processing question, or hey, I got to this step in the app, what do I do? We've got a whole team of folks that will be there to help, and they're awesome. 24/7 call center, the whole shebang. So we're here to help.
Great.
Yep. We look forward to hearing from everyone.
Yeah. Well, Debbie, thank you for
they're
having us.
going to reach you out. I know. Okay. Thank you, everyone.
Thank you,
And
Debbie.
thank you
Thank
again,
you, everyone.
Dustin and Tricia. And we'll see everyone soon. Take
All
care.
right.
Everyone.
Bye-bye.
Bye.
Bye.